Hi, my name is Gerard Panneton. I'm the chairman and CEO of Gold Terra Resource Corporation, a Canadian exploration into northern Canada, more precisely Northwest Territory. We're focusing on high-grade mineralization in a camp that has been known to produce 14 million ounces of gold at between 16 to 22 gram gold. Our focus is to bring back enough discovery in the Yellowknife camp at a very cheap drilling cost of $200 per meters, unless it's deep drilling, and bring the camp back into life. Our goal is to find more than 2 million ounces. So far, we've identified 1.8 million ounces in different locations. Once we reach a 2 million ounces target on the Con mine, we'll be in a very good position to move forward.
Gerald, how are you, sir? We were here last year, literally.
Was that bench?
It's the same bench.
Same bench. Okay.
It creaked when I sat down.
Oh, you must be sitting on my side.
I must be fatter. We're here at the Broadmoor, lovely, beautiful yes. Broadmoor First Metal Conference, which is going on. Lots of people walking past us on their way to their first meeting.
Beautiful day again.
Fantastic day again. Love it here. Love it. And also some serious money here, for sure. What are you hoping to get out of this conference?
I've been coming to the Denver Gold Show since 2006 when I started Detour. And, if there is one conference to meet almost everybody, it's interesting. We go to Beaver Creek because of the style of investment, because we see a lot of smaller investors in Beaver Creek. We see a lot of company looking to invest in juniors as well. If they have the money and they have the will, they want to, fill their pipeline, basically. Yeah. And I think what we also see from Beaver Creek to here is that the mind change. More of the investors that are here, some are duplicating, but then the company are not interested in junior. Now they have to do their own pitch. And as you know, the own pitch is about cost, all-in cost, averaging $1,600 an ounce. So they have their own struggle to make sure that their mines will be profitable.
Yeah, and we've spoken to quite a few producers over the past few months, certainly this year, where you're right. The margins, you think with high price gold environment, the margins they're not. The cost environment has also come up as well. The other thing that they are saying, because we've seen lots of mergers of equals, company, producers buying producers, merging with producers.
Not that many.
Well, and enough to suggest that there's more money than sense around at the moment, because the expectation is that this money cascades down through the industry, down to the explorers. But that's not going to happen anytime soon, right?
Well, you think that you can explore and you can define some ounces and attract interest. At the end of the day, through the years, to the last 40 years, whatever you do, I was on the side of looking at juniors when I was at Barrick and looking at projects around the world and say, what does fit our strategy? And back then, Barrick was producing 8 million ounces a year. So we were looking at projects that had 5 million ounces plus resource or reserve and the potential to grow to 10. It's one thing to make an acquisition. It's another thing to see the plus value.
Yeah.
You can buy another producer and merge for the cost. But what if you end up with a bunch of headaches?
Yeah.
So look at Newmont. Newmont, they're selling all their Canadian assets. They just merged with Newcrest, and they're dispensing smaller mines. I look at them on paper, and I said, no.
Yep.
Either too big or too high cost, and too small, and not necessarily in the perfect jurisdiction. Don't get me wrong. I mean, those assets are good. They're built. They're profitable. At $2,500 an ounce, but when the all-in cost is at $2,000 an ounce, it doesn't help. So you got to look at the pearls, the people that will. It's like, for example, for us, we're not in the boonies. We're in Yellowknife. Gold Terra is very fortunate. My winter drilling cost is $200 per meters. I only drill from January to April. I get into the summer, it's a bit more expensive. I do the deep drilling, it's more expensive. But at the end of the day, everybody goes home at night. The infrastructures are there. Hydroelectricity, the mine site, the Con mine site. So will we see a lot more M&A in the future? Most likely, because there's a disconnect. But I think what's missing is the premium that the major used to have, that they don't have in this current market.
I'm hearing the same thing because,
So I'm repeating.
well, well, I think you're repeating wise words that perhaps this sector needs to understand, or certainly retail need to understand, which is that the producers are looking at other producers going, well, yes, they produce the ounces, but I should say, where's the margin? Is it a headache? Is it the right jurisdiction? Does it fit us? No, they're dropping down into advanced development stories, and they're saying the same thing. Not all, bankable feasibility studies are equal here as well, right?
Sure.
Right, for sure. I know you know that, but
Well, I was lucky. I was involved in 3 mines, and they all went well. But it doesn't mean every one of them is easy. But I was in a school, the School of Barrick Gold, for 12 years, and we were successful building mine. So is other company. I'm not saying we're the only one. But at the end of the day, in the price expansion, price inflation that we're living today since the post-pandemic years, it's been tough for a lot of people.
right.
Like, what can you say? The company will have to look because their pipeline is not full.
Right.
Their pipeline sometimes is risky, geopolitically speaking. Like I'm focusing in Canada. Why? Because I speak the language, I know the law, I know the rules. Who's exploring in Russia now? You remember Russia? Like everybody was exploring in Russia before. Who's exploring in Russia now? Not too many people.
Not Petro Pavlovsky, no. But your point is well made. Where I'm getting to in this conversation is this money kind of cascading down through the industry. It will come, but I think those that are looking at advanced development stories are not finding what they want. Just because you've got a DFS doesn't mean that you're investable. A couple of CEOs have said to me in the past week, actually, we're dropping down into early stage development companies because we see more potential there. Not because, and they don't really want to, because they want near-term ounces, not far out ounces. But there's more certainty potentially by having some sort of input into how these companies develop. So for you guys as an explorer, how are you setting yourself up for either becoming a sort of early stage developer or delivering what these big guys want? Because that's where the money's coming from at the moment.
I would answer it a bit differently.
Okay.
I am not looking. Of course, if somebody wants to invest as a strategic investment in my company, I'm always going to be listening.
Sure.
I'm going to welcome the investment because there's no money out there currently. Okay.
Yeah.
So it's very difficult for me to move my project at the pace I'd like to do it. I could move my project on a very good basis. Give me $10 million a year, for example.
Yep.
Give me $10 million a year and I will move my project. If I only have 5, it's going to take too more time, twice the time. But I'm not there to be bought out. My job is to de-risk the project to the end, to the gold bar.
I get it, but here's the tough
But
thing.
not too many people are like that. You can talk to 95% of the junior.
They don't know.
They all just want to be bought out.
Yeah, because they don't know.
That's not my strategy. My strategy is for my shoulder to make money.
But at the same time,
And you make money if you find more gold and de-risk the project.
okay, but it's about timing the market. The market right now sucks. Retail is not getting money. They're terrified what's going on with the economy, and they're just not there for you. So in terms of going out and...
Stop investing in bad companies.
Yeah, amen. Amen. And we do try and point at things which are bad.
And I don't want to talk about bad companies, but come on.
Let's not do it because there's a lot of them. We run out of time. But for you, though, it's, okay, timing is everything. And if the money's not coming from retail, it's got to come from somewhere. We've seen companies sort of change or just slightly adapt their business model and say, well, look, maybe getting a strategic investor in is smart.
I am open to that.
Right, okay.
But I am very open to a strategic investment in my company. Whatever it comes from another producer or a mid-cap. Look, I am in a range where you produce... Our target is to produce 150,000 ounces a year.
So
It's kind of like we're borderline in being too small and not big enough. Because it's investment. A company like Newmont that produced 6 million ounces needs to do it between 10 to 20 mines. 6 million ounces divided by 20 is 200,000 ounces. They're not going to look at anything below 200,000 ounces. I was at Barrick for enough longer years that you cannot manage more than 15 mines in your portfolio. or you need to have some, and not in 15 different jurisdictions.
But
My advantage is to be in Canada.
it is. And
It's stable for cost. The Canadian dollars is 40% discounted to 35% discounted to the US dollar. We have experience in underground mining, in open pit mining. We have all the infrastructure. You look at Yellowknife. I mean, there's a huge parallel between Detour and our company, Gold Terra. There's a huge, one big advantage that very few people have.
It's high grade, which is good.
Yeah.
And a lot of ounces come out of the ground there. It's quite deep. So again,
Deep and surface, there's both.
There's both. Okay, so I'm just going to work out what type of company would be attracted to that. Big balance sheet is one thing, but skill set's another, right?
We have the skill set to move the project forward, and we're very low G&A profile. I think there's many companies, but say for example, take Agnico Eagle, great Canadian company, work in the north. Here's going right there. There's definitely an advantage for Agnico to be at ease in working in Canada because they are strong in Canada. Mm-hmm. There's an advantage for any company that has an asset somewhere in the world and wants to have an offset and a stable property. Mm-hmm. So there's a lot to gain if you want to do that. At the same time, company look at risk. This is the first thing we look at. There's a due diligence checklist. I'm not saying that at Barrick it was like this, but at Barrick we had our list of due diligence. We were checking. And the first thing we say, infrastructure, power, water, no glacier, access. What's going to be the cost? You can mine pretty much anywhere in the world at a certain cost. So all of those things that you list at the beginning of due diligence, geopolitical risk. I mean, you look at, in Africa, they're still changing mining law and interest into what they're doing because in Canada, we're home. We're home with the First Nation. We're home with the Canadian government. We're home with an established law system. It's like in the U.S. We speak English. We want to do very good for the stakeholders, and the stakeholders are numerous. The advantage when you de-risk a project is to look at it from a perspective of, I'm going to give you the example. How did Detour Gold and Detour Lake Mine was built in 6 years, from IPO to gold pour? Because in the first year, I went out and negotiated to take on the surface lease and mining lease from Goldcorp, which was part of the deal as an option, as an opportunity, but I made that opportunity right up front before I found 30 million ounces of gold. So when it was time to build a mine, post-feasibility study, which was, Barrick standard feasibility study, we were ready because we had a surface right. We just put a feasibility study, the closing plan, and everything we were doing into the permitting process. And it was not like building a mine in the brand new Bonies where it takes 3-4 years of EIA and then permitting process and consultation with all the stakeholders. I've done that on my first mine, Sulawesi in Tanzania. We had to go from A to Z to build a mine, including the lowest portion, which is the EIA and the consultation. Con Mine is our asset of de-risking the project through permitting, for example. Mm-hmm. If I put back the mill on a brownfield site, industrial site that has already been disturbed, the permitting process is very different.
I know you know what to do, right? But the market is the market right now, okay? Yeah. You've just renegotiated. Even. For sure. Like I always think the name of the game right now, for some going to just stay in the game, right?
Yeah.
You've renegotiated an extension or 2-year extension with Newmont on this. I mean, yeah. You had to explain why you had to do that. And how long did it take?
It takes a while, sometimes to negotiate with company. The bigger, it's like doing a small deal with a junior could be very quick. You do that within 2 weeks. I remember negotiating a deal once with another company, and we met for lunch. We wrote the agreement in the afternoon, and he flew back home to South Africa, and I flew back home to Canada the next day. And the deal was done. And I bought an asset. Yes, it's not the same today. Newmont is big. It depends how the company is structured. I requested the extension last year in the fall.
Right. So you knew last year the market's going to be tough, right?
Well, the market has been tough since 2021.
Yeah.
It's been going down since, it's been 3.5 years that we have had no market. My first million share I bought at Gold Terra was 36 cents 5 years ago.
Yeah.
Now my stock is 5 cents. I own close to 8 million share.
Yeah.
And I never took any stock option. I've been working harder and harder for little and less, despite the fact that it's one of the best high-grade projects in Canada with infrastructures. There's a disconnect. There's no retail buying. Did they get burned? Did they went somewhere else? I have a small explanation, actually, for the retail absence. I think we fail as an industry to attract the younger generation. Bluntly. That's my gut feeling. And I'm not a statistician. I don't know the numbers. It would be very difficult for me to make a comment. I certainly believe that if you lose the interest of the next generation towards gold, you fail. Because I think when you go to Europe and you do marketing and you have a lunch, say with Heinz in Geneva or in Zurich, the average age is over 70.
Oh, it's
in the room.
It's horrific.
I mean, the gold bugs, the guy that understands the value of gold, it's missing. People believe in digital and paper. I believe in physical gold. I still own all the gold I purchased 11 years ago when we poured our first gold at Detour. I've never sold 1 ounce of gold. And I still own that all of that gold from the first break. And people don't realize that there's a disconnect even between paper gold and physical gold.
Right, but it comes back, and I do want to talk about the macro in a second, and people, the perceptions in the market, and the youth versus the existing retail. But just sticking with you for now, right? So you knew last year it was a tough market. You knew you needed that extension because you're not going to be able to move the pace that you want to move, and not quite sure where you get the money from either. So in terms of, you're open to strategic investors and alternative financing. What have you done in terms of looking and talking to strategic investors or alternative?
I've talked to everybody that was willing to listen to our story. I've approached them.
Right.
From all the way from Barrick to last week at Beaver Creek to companies that I fit were a better fit, because I don't think Agnico, Barrick, I think Barrick would be a good fit because, first of all, Mark knows me, and also he likes Canada now. And our property is actually a property size for a major or a producer because it's big. Like, we control 1,000 kilometers. We don't have any neighbors. I sometimes say about comparing, why is Yellowknife not on the map like, say, the Golden Triangle? The Golden Triangle in BC is on the map because there's 20 companies talking about it. I'm by myself in Yellowknife. So there's not an additional numbers of people talking about it. It's definitely a difference. In my mind, it's less promotion for free. I'm by myself talking about it. But, Barrick produced 4 million ounces. The only reason it will be Canada. Agnico Eagle produced 3 million ounces. So we're a bit small for them, but it's very cheap. You buy the company for $7 an ounce with 1.7 million ounces, but a huge potential. But they may never find the deposit they want to find. You see, the catalyst for me is like derisking the project is not just attracting the retail, but making a discovery, an additional discovery to what I'm doing.
Okay. So what happens? Is it a sit and wait game? Wait for the market, because the market is there.
A lot of people will just going to sit down. In my case, I cannot. I just negotiate. It took 6 months to get the 2 years extension. Do you want me to sit down for 2 years and renegotiate another 2 years? They're not going to like it. The reason they probably give me the extension is because we spend more than $11 million in 2 years on the property. So if we spend money, they like it.
But you and your shareholders don't want dilution, right? So I'm talking about it's the cost of money, the type of money, and what do you do with it? Those are the big questions, right?
It's hard now.
Yeah.
But my strategy about dilution is very painful now.
Yeah.
I'm trying to stay 15 to 20% dilution per financing. I'd love to go below 10%, but it's not possible. We do everything to cut costs. Our team lives in Yellowknife. We have no office. It's a part-time office in Vancouver. Look at this, $120,000 a year for a CFO, part-time, accounting, filing, and an address. Try to beat that. So we're low. We're low-key. Now, I still need to advance my option on Newmont, because if I did not spend that money, they probably would have not given me the extension. And I'm that close.
Yeah.
If our shareholders are patient at that price, even if it's dilutive at this point in time, the moment I reach my 2 million ounces, which is there, I just have to drill it. It's not a question that will I find it or not. I just need to drill it.
Yeah.
That 2 million ounces with a PEA or in the process of a PFS will basically give us a re-rating, I suspect. A re-rating in the order of going from $5 an ounce to $100 an ounce.
Right.
So if I do 2 million ounces and I'm valued at $100 an ounce with a PEA or a good PEA,
right,
or a solid PFS, it's...
So you think it's worth raising the money to do the get that additional 200,000 ounces to get you to the 2 million mark? Is that roughly? How are you viewing it? Like, how much money have you got to spend to get to a PA, which
20
gives you the
million.
re-rate? 20 million. Another 20 million. What's the market cap?
17.
Right. So there's the challenge.
No, the challenge, you do it step by step. You're not going to create 100% dilution because of that. You're going to go step by step. I was hoping, it's like you're trying to achieve your target. We just spent, under $2 million to do a master hole at depth.
Right.
That master hole basically,
3,000 meter one.
yeah. And then now the next step is to wedge. The wedging will take 2 years to do.
Right.
Okay.
What's that do for you?
What's it gonna do? Yeah. I was gonna spend $5 to $7 million over a period of 2 years. So I don't need to raise the money now. I can raise a bit at 5 cents, maybe at 10 cents, at 15 cents, at 20 cents.
But what drives that up? What are the things that you think are
So
catalysts?
you spend $5 to $7 million to show that you can find 1 to 2 million ounces.
Okay.
So that's $5 an ounce.
Okay.
Tell me of a project that's going to be cheaper than $5 an ounce.
Not many.
There's company, I look at other company, but not for comparison. I look at company by interest to look at what they have. They have market cap of $25, $50 million, junior. They have 0 ounces.
Well,
0. The chance of finding something is not 0, but almost.
yeah.
Because it's not necessarily established. I am in an established camp with 20,000 people, with more than think about it, Detour was built in 6 years, from IPO to gold pour, for the same reason I'm buying the con mine. It's already permitted. It's a brownfield permitted project where I can just apply for a new activity with the fees and a closing plan and a new bond.
So what are people doubting about your project, do you think? What do they...
I'd like to have all the answers. I'd like to have the answer. I know there's no retail,
Yeah.
but my shareholders, so I would say 25, 30% of it, they understand what I'm doing, they believe in it, and they're supportive. They come in and every financing. They may have come as a lead order 3 years ago, but every financing they've came with their 7%.
Yep.
So they are very supportive because it is very cheap. It's crazy cheap, but one day it's going to change for many companies that are worth investing in.
Okay. Let's park that up. Let's talk about the gold market at the moment. Obviously, you said there's a disconnect. There's lots of disconnects in this market at the moment. Obviously, gold at 2,600 nearest damn it, and it was last week.
25.82 this
Yes,
morning.
and it was over 26 last week, so it's all good. But no one's
It was
getting...
25.
Okay,
It started the week at 25, and we went up $80. Good week.
it's crazy. I'm not
3%.
not looking over at a few dollars. But the developers not seeing reflect. The producers are, because that's free money to them, right? Money that's fantastic. There's additional dollars per ounce. You guys, no one's giving you value for that future production, because I think most people think most of these companies will never get there. So let's not overvalue them now.
It's a simple disconnect. It's the company that produce gold have a value that is easier to account for. They're delivering. But if they miss a quarter, they get slapped.
Yeah, disproportionately. Yeah.
Sometimes quite disproportionate. That's when you buy. Because they're going to eventually, because they have, especially the Barrick, Agnico or Newmont, and even B2 Gold was not a darling for a while, because I'm a shareholder of B2 Gold, so I follow it a bit more, so I know a little bit. It was not a darling because they miss a quarter for building, and they slammed the stock down to 250, 240 on the U.S. market. But it's bounced back. It's 320. They see the end. They see the end of building the project. That quarter is behind them. So they're very harsh on bad news. They'll slam the stock down like there's no craziness. But the moment they see a strategy and they see you de-risking the project and getting back, they're very good. Now, my job is to get support from shareholders to de-risk the project to a point where the value will increase. What I was trying to explain to you is that the 2 million ounces at the Con mine that I'm planning to find, plus the 650,000 ounces left in the mine at 11 gram, will make our project at 2.5 million ounces with a 20 years mine life. Okay? That is, in my mind, the threshold to build a new mill.
Right.
So if my mill, say, don't quote me on pricing, I'm just using a price. If my mill costs me $300 million because I have something like more than $100 million US of saving on the project site, that translates into $150 an ounce over the life of mine for depreciation.
Okay.
That's how you look at it. How many ounces do I need to build a 2,000 ton per day mill? And because you use a con site, the cost is very cheap, because all the earthwork that you need to do in the first 3-4 months of construction is done. You don't have to do anything. I don't even have to put an office. There's an office with a warehouse.
Okay.
I have a water treatment plant. There's so many things that comes along with the acquisition. For me, there's at least 100 million US of saving on the Con mine, at least, plus the time of permitting. Now, my job is to de-risk. People find the project risky, fine. Some people don't like the deep drilling, it's okay. If I want to find 2 million ounces, I need the deep drilling. I know the deep drilling is only going to be 15 years down the road, because what I found already is year 1 to year 6.
Wow.
So I'm already okay for the first 6 years of the mine on my cash flow model. So I just need to find more to keep going to justify spending the money to build a mill. Because in Yellowknife, don't look for a mill, there's none. The moment you have a mill, custom milling of all the project to the north, 20 kilometers north of town. We're so close. It's like, and I don't think, I'm not there to compare. Maybe an analyst can do so. Sorry for tapping the microphone. The advantage of Gold Terra is being in Canada, being within infrastructures, having a Con mine option, and being able to expand our resource for years to come. And we could probably do that for over the next 5 to 10 years. Even if the mine isn't in production, we will find more.
Okay.
There's a huge plus value to what we have.
Well, let's look at what you talked about earlier, which is this kind of like, the industry's got to attract new money, new investors. The youth aren't there yet, whether they be anti-mining or they're making way too much money on the tax base. For whatever reason, they're not here, and for whatever reason, the industry's not doing its job. Let's focus on gold price. This sort of 2580 number you mentioned just now, producers doing just great. There's a kind of number, and it used to frustrate me. Back in 2020, everyone's talking about gold 3,000, gold 5,000, gold 20,000. They're just crazy stuff for the time, right? Gold 3,000 feels a lot closer now. What do you think the gold price is going to need to do for the whole industry to actually start benefiting from that price move? Because gold 2,500 is not doing it.
Regulation of physical gold versus paper gold.
Okay, interesting.
If anybody was getting together to collect their physical gold and take it home in their safe, the bank will collapse.
Yeah.
Basically, the whole financial system. Because
the ratio is
the
wrong.
problem with gold is not gold. It's the paper trading and the paper transaction that are not backed up by physical gold.
Yeah.
So with that, you could see gold jumping much higher than the $2,600. And I think the reason the gold price went up, look, we just went from $1,800 an ounce to $2,600, which is in less than a year, $800 improvement. Or if you want to look at it that way, 35%. Gold went up 35% since October 2023. Isn't it great? It's wonderful. Finally, we're getting some recognition, but it's driven most likely by people buying physical gold. Because every time there's a chance, they're trying to stop the gold to explode. That's what they're trying to do. By basically flooding, they don't want it. The Fed needs to finance one of the most biggest debt. And the only thing they have in mind is capping the gold price. Because the only value is not paper, is not equity shares on the market. Physical gold is value. It's like mobile real estate. You can take your safe and go somewhere else and start again. Can you do that with rubles? Can you do that with, any other currency except the US dollar? No. And everybody has US dollar, but everybody would like to have something else. What else?
Well, the Russians and Chinese have got an idea.
Yeah, the brick thing. The brick thing, but they want to build a gold reserve for it.
Yeah.
But Russia has to finance its war with gold.
I don't know so much about that side of things.
Me neither, but I would suspect that this is money for them.
Yeah. Well, I mean, whichever way you look at it, massive disconnects all around. It's been hard to read. I started saying that in 2020. Normal rules don't apply, and they have not applied since then till now. And I'm still looking for an answer. I think lots of
an answer for
why this mining space of ours can't work on a high metal price environment. For why so many people have left it, why institutionals have left the space.
Because of ETFs.
ETFs is one thing, I think.
No, but it's a big thing. You have to look at it that way.
Sure.
For example,
I would argue.
What did, for example, the juniors suffer the most over the last 20 years? Royalty company took a lot because it's safer for a lot of people to invest. And then the second one was basically ETF.
Yeah.
The moment you created those basket fund, you eliminate the risk of choosing. For example, we used to have, say, 500 investment fund.
Yeah.
With 500 technical team that used to evaluate and say we should invest in this because there's a plus value or because of this and because of that. Today, you have 10 ETF. Say just as a number, say you have 10.
Yeah.
With 10 team buying all of the junior they like, creating baskets of junior or basket of major.
But here's what I'd argue. Just a counter argument, okay?
You can try.
I'll try. I don't need to be right, but I'm going to try, which is, and you said it earlier, there's too many bad companies here.
There's no question.
Right? And why there's so many bad companies is because you've got retail investing in utter crap that they don't understand. And that's a bad thing. I think most of retail, obviously there's lots of very talented, clever
people.
They get burned. The value destruction, and that ripples through, and then they leave, and they don't come back for a long time, generation maybe. So I think the ETFs for most retail is a better solution than trying to invest directly. I honestly believe that. Or at least 80% of their portfolio, and then leave if you want to go and try and work out what's good and what's not. 20% of your portfolio.
What should we do? So what should we do?
So that, but that obviously has a knock-on effect, which is the fact that only a select few management teams and groups get the money. There's not as much exploration, and we need lots of exploration to find stuff because most
at the right place.
At the right place, and most of our exploration
with the right people.
Is pure luck, pure timing.
No, that's bullshit.
I think that's true. I think the amount of people that said to me that the last drill hole, you look at, was it Ross Beatty? Last drill hole. That was the last hole we're going to drill. We found stuff. Lots of cases where big mines have been found at the last minute. So there's lots of good work happens, and you systematically go through.
You do need gold. You do need luck.
Yeah.
But you still need to be at the right place.
I hear you, but luck is a big part of it. It's I think I was with a group last week, and they said, what is mining? It says mining is luck and a lot of alcohol. He was joking, but it was something, and they've made discoveries, right? So you can't knock it, and it's somewhat in jest, but at the same time, reflected.
Yeah, but he was at the right place. If he made a discovery, it's like I was looking. I looked at a company last night on my computer because I saw them last week, and a lot of people talk about it. They have a bigger market cap than I have, not by much, but still. And so I decided to look at what's all about this. Yeah. Some of the people like news story. Okay, sure. There's first of all in the investment business, whatever you're talking about, a fund or retail, and a lot of people that I experience.
Yeah,
there's a lot of. I look at my shareholder registry. I have one of the best gold fund for resource in Canada. Is invested in my company.
Right.
I can show it to everybody.
Yeah.
This is one of the best.
Based on what? What do you mean they're the best? Based on
because they have money.
Yeah.
And because they firmly believe they're very selective in what they invest. I would say maybe they have only 5 junior in their portfolio. Okay. The rest is all producer.
Okay.
It's big money also. It's probably one of the most healthiest fund in Canada. And they know what they're doing. So I'm proud to show that they own 7% of Gold Terra.
Okay.
So, but even to be luck, you need luck, okay? Everybody needs luck. But to create your luck, you need to be in a good place. So I look at that company yesterday, and they're going to need a lot of luck to have a 2 million ounces deposit.
Which company, sorry?
I'm not going to...
No. But you looked at someone yesterday.
I look at a junior yesterday.
This is not going to happen.
Their model is interesting.
Right.
And his market cap is, say, $25 million.
Yeah.
35, 25, 25, 30, so almost twice as much as mine.
Yeah.
Good land package, but no resource.
Right, and they won't deliver what you can deliver.
And then I have already 1.8 million ounces with a $17 million market cap, because I'm maybe my story is fatigue.
Maybe.
From some investor. Yeah. Because investor in general, they're not long-term unless they believe in it. But I believe in it, and that's why I'm a long-term investor.
Of course you should believe in it, but but here's the thing. That perfectly sums up the problem in the market. You, who've built mines, who've been in the industry, you've made discoveries, exploration, all that kind of good stuff. You know what good looks like. For average retail investor, if that news story comes along and it's pitched the right way, it looks like it's going to go to the moon and all of that stuff, and they're going to put their money in that thing, not yours, right? So that's what's just happened. Money's got distracted.
Or size.
Just got distracted.
There's also some investor, they look for size. Yeah. I remember meeting somebody in the UK last year, and he took a meeting. I told him my story, and it's a funny thing because I was sitting at the SMI right after 121. I was sitting beside a booth. I recognized the guy. I just wanted to say hi.
Yeah.
He didn't even look at me. Went straight to the other story, because the other story is maybe 5 million ounces, and my story is only 2.
Okay.
And he ignored me completely. No, he could not even, for me, I'm off his radar, completely off his radar. I cannot control everything, No. You don't control, a lot of retail needs sometimes education for where to invest. But a lot of people also invest because of one person, even if the project is bad.
I know, but I think we better wrap up here because then we could run for hours and hours, and I'd love to. But there's so many moving parts for retail to look at.
You should hire me.
Exactly, to simplify it, right? Where you just go, investing can be quite easy, but you got to look at the right things and not make assumptions that
location, project quality, people to deliver.
Yep.
The geopolitical risk, the infrastructures. You can have it on your one hand or two hands. These are parameters that every investor needs to have to alleviate the risk of investing in somebody. Some people are just pop in, pop out.
Yeah.
I've been in Terra X Gold Terra to come and help out of retirement 5 years ago, and I'm still here. And even if the market is tough, I don't give up. I believe that we can find a lot of gold in this project. I would find more if I had better money supply. I live with what I have.
That was a good conversation. Appreciate that.